Good morning and welcome to OAG's latest webinar. It's good to be back. It's been a bit of a longer summer break than we originally expected. There's been lots of activity in the UK, not least a funeral that meant we moved the webinar date. So sorry if you were expecting it a few weeks ago, but we're back today. Lots to catch up on. It's been a very busy summer in aviation. With the launch of OAG's Mega Hubs, the first time we've launched it since before the pandemic, back in 2019, we're going to be focusing particularly on airports today and looking at some of the Mega Hubs results, as well as all the usual things we look at in the industry. Before I introduce our panelists today, here's a look at the things we're going to be covering today, not necessarily in this order, as you will know if you're a regular with us. So we'll look at the Mega Hubs rankings, we'll look at where we are in terms of recovery and particularly what's happened over the summer in aviation. And we're going to look at some of the risks and some of the issues and trends that we're seeing on the horizon and talk about that with our guests. And trying all the way through to talk about airports and what they need to do to be resilient. As always, please ask your questions ideally as we go through, and then we'll try and pick them up as we move through the session rather than doing it at the end. But just use the chat box to put your questions in. So joining me today, as always, we've got John Grant, OAG's Chief Analyst. John, thanks for joining us today. Tell us, you've been travelling a lot over the summer, haven't you? What's your experience of airports this summer?
Yeah, hi, morning everyone. It's been mixed, I think, Becca. Certainly there's more people around, which is good. An interesting sort of split between those with and those without masks, although I think the withouts are becoming more predominant. Security queues and congestion is still an issue, I think. I went through Heathrow on a number of occasions. And even when you go, or are lucky enough to go through the fast track lane, doesn't really help because there's only 3 people working it and they're overwhelmed. So yeah, I sense we're returning to normality, but the resource issue is still, I think, the biggest single challenge we've got now in most parts of the world. And we see it every day. In Europe, at airports capping their winter capacity and other such things that are being put in place, which is not good news, but a reflection of the times, I think. Yeah,
good. Okay, super. We've also got Shukar Youssef back with us, I think for the second time. Thanks for joining us today, Shukar. You're a founder of Endow Analytics. You're a regular commentator on the industry, so I know you'll have lots to say. But you've been travelling as well this summer, haven't you? Have you got any observations about travelling in Asia and the experience at airports?
Hi, everyone. Yes, I've been to a few places within the region here, mostly in my part of the world. And, people are very much still very cautiously optimistic. They're still, Asians being very careful about things. They still got their mask on, and the security people are still very adept at looking at luggages and so on and so forth. So apart from that, you don't feel anything different other than that people are just going about their business as before. And there's a sense of hurriedness in people wanting to go about to the destinations. And the one thing I discovered is people are traveling less heavily now, with fewer luggages, and that's I suppose is partly to do with the fear of having your baggages stuck somewhere when you're in transit, or that seems to be the case. When I do talk to people on my travels, and then they seem to be very worried about having huge big luggages whenever they go on intercontinental flights, for example. So many of them, wherever they can, they just have this one piece and maybe a backpack or something along, which I think will be the trend in the near term until we sort out all the issues at airports around the world.
Yeah, no, actually, it's a good observation. I've seen the same thing, people doing intercontinental travel with just hand luggage, and that's going to be an interesting one going forward, isn't it? Well, good to have you with us. And Mac is OAG's Regional Sales Director for Japan and Asia Pacific. It's a while since we've had you join us, Mac, but thanks for coming on today.
Thank you, Becca, and good afternoon, everyone.
Yeah, and what about you? You must have been traveling around the region as well. Have you noticed anything in airports? Have they used the time to become smarter about how they process passengers? Has the passenger experience got better, or has technology changed the way you're seeing people move through airports?
Yeah, that's right. So I was in India last week, so traveling from Singapore. So Singapore's invested quite significantly during the COVID crisis. So they've renovated Terminal 2, and it's all through automated gate process. So we've seen a lot of investments that Chinese put into that. India's buzzing. So a lot of domestic travelers as well as international. So when you go to Delhi Airport, you kind of wonder if there was any COVID, because everything seems like as if it was back to 2019 level. It's very seamless. There's no major paperwork that you need to fill out. It's just basically your arrival card. You take your finger stamp and off you go. So it's pretty seamless in terms of the customer experience as well as processes that's been implemented post-COVID recovery.
Good. Okay, let's start with our first look at where we're at in the industry. John, do you want to speak to this to start with? This is just showing total global capacity each year for the last 4 years and where we are today. I'm seeing that we've got dotted lines beyond this point in time, but of course they should be solid lines for the years previous to today. Just this yellow line is what's still to happen.
Yeah, so probably best just to remind ourselves of where we were around the end of August, middle of August, when we had our last webinar, I think, and we had broken through the 100 million seats per week. We maxed out at about 106 million seats per week, which was a stronger recovery than I think we expected. And of course, in all of these numbers that we talk about today, the great unknown is what the actual demand was for those seats, and particularly when we talk about the next quarter. But we're in a slow pattern of descent at the moment, which is standard for this time of year. We've entered the last month of the summer season. The nights are drawing in London and the Northern Hemisphere. It's getting a bit colder. The holiday season has finished. Leisure travellers, particularly those with children, have returned to work, so it's no great surprise. I think you can see that there's less schedule volatility around the world than we were seeing this time last year. There is a much more consistent pattern and confidence amongst airlines to put their schedules out there. Not as many seats as this time in 2019, but if we don't dwell on 2019 and we actually look at the improvement in capacity, 22 versus 21, that is significant, and it's noticeably accelerated in the second half of the year. So if you look from about June onwards, you can see that there's been a spike, and it's been pretty steady. Whereas in 2021, around August, we saw another sort of reduction in capacity. So it's all looking good. We're still seeing airlines adding capacity for the last 3 or 4 months of this year, particularly in China. Chinese airlines are being particularly slow in adding and publishing their schedules for the next 3 months, with about 5 million seats still missing per month that will be injected back into the system in the next few days. It's Golden Week in China this week, so there's not much action and there's not much work being done by the airlines from what we can see. But I suspect we'll probably be down at around the 86, 87 million seat mark by the end of 2022 per month, and that's going to be an improvement on previous years. So I think we're heading in the right direction. And importantly, if the fact we have less capacity is aligned with the optimism that we're getting higher airfares and airlines are more profitable, then that would be good news. However, as I think we'll discuss later, if you are an airline CEO at the moment, you face some very severe challenges operating through this winter. It's a tough market for sure that we're seeing, and fares are certainly not keeping in pace with the cost of operating.
And this is obviously capacity. Do we have a sense of where demand is? Because the fares are high. Is that suppressing demand? Is the
well, I asked the publishers their load factor reports, and they've remarked that it's noticeable that load factors now, on an industry-wide perspective, are lower than they have been in previous years, and that's off less capacity as well. So I think that gives you an indication of what's happening. And it's even been reported that Ryanair had an empty seat on a flight a couple of weeks ago. So anything can and will happen. But I think it's markets are softening. One of the noticeable characteristics when we were talking about travel that I've found, Becca, is that on long haul flights, and I've done quite a few long haul flights, the premium cabins seem to be quite full, and that may be revenge spending, or it may be people, and it's lots of couples, or it may just be that they want a bit more social distance. The economy cabins typically have been lightly loaded, and there is some strange strategic behaviour taking place. I mean, both Qatar Airways and Etihad, for instance, from London Heathrow every night are running 3 flights to their hubs within 2 hours. Wide body capacity in Qatar's case, an A380 on one of the flights, and the economy cabins are lightly loaded. So it's a tough challenge for those airlines to balance holding on to those slots, which is why they're doing this, and equally being able to command any sort of revenue from the flights operated.
Yeah. Okay. Let's have a thanks, John. Let's have a look at how it differs across the regions. So this is this chart's got lots of lines wiggling around all over the place, but essentially we're seeing that continuation of the trend upwards that we saw before the summer. We've pulled out China and India from the rest of Asia. So this line at the bottom, this dark orange line, is Asia. Asia's still lagging some way behind, isn't it? I don't know, John, Shukka, do you want to comment on that?
Well, yeah. I think when you strip out China and India, of course, Becca, you're left with, the dominant constituents in that line are Singapore, Hong Kong, Indonesia, Malaysia, and they've just, they're still struggling to recover. There's good news in many of those markets, quarantine restrictions being eased. Japan allowing international visitors from next week without any restrictions. Taipei allowing international visitors. Hong Kong removing quarantine requirements. So there's lots of small steps that are going to help in that recovery. But that brown line that you have for Northeast Asia or for Asia, until China reopens, that is always going to lag behind the rest of the world. It is so China dependent. It is almost like a ransom to the rest of the region, being able to access the international and domestic markets in China.
And Shukka, we've got, when we were talking the other day, we've got a new airline starting in Malaysia. Is this a time to start a new airline in Southeast Asia?
Well, some people seem to think so, because leasing costs are very much lower than what it was pre-COVID. And a lot of lessors are very keen to place these aircraft. And so there's no shortage, I would say, of crazy rich Asians in this part of the world.
That'll be a webinar title, Crazy Rich Asians.
and they think they can reinvent the wheel.
But do you mean crazy rich millionaires who just want to be rich Asians?
Yeah. Well, there are many of those here, John, as you know. I mean, we've just had the F1 in Singapore this past weekend. And just to sidetrack a bit, because we had over 300,000 attendee guests for the F1 on Sunday, and it was a record of some sorts. And half of those who came were international people. And so I think Singapore is an exception to the rule, because there's a lot more interest And the anecdotal experience that I've been talking to people here, the casinos are starting to be filling up as well. And so I think it's good news for Singapore and the hospitality sector here as well. But unlike Singapore, the rest of Southeast Asia, in Malaysia, for example, we talked about my airline getting its AOC at a time when Malaysia is still struggling to attract foreign tourists into the country, largely because we're entering into the monsoon season now. I mean, it was pouring, it has been pouring and thunderstorms and all that in the past few weeks anyway. So that is going to be a hindrance to anyone who, because many of the resorts are in the along the east coast part of Malaysia, where it's been hit hard most by the monsoons. So that's, I think it would be a deterrent to a lot of that. And so we'll have to wait until February, March next year when the weather pattern changes before we can have any sense of how many tourists are interested in coming here. But I hear in Indonesia they're ramping up for the G20 next month in Bali, and there's a lot of interest in that, not just from the business, from the work perspective, but also from the holiday seekers. And similarly for Thailand, and not so much for the Philippines, right? So I think so this thing about India being shut, China shut, yes, it has had a huge impact on the region, but they've been made up by quite a number of visitors from the Middle East, some even from as far as Central Asia coming down here. Also, we're still seeing Russians, I'm told, in some parts of Malaysia. So it's interesting to see those developments. But I agree with John. I think that until those markets in the two mega population, India and China, opened up, I think we're still going to lag behind.
Okay, thanks very much.
It's interesting, Shukar, it's interesting what you're saying about Central Asia. I've been spending quite a bit of time there in the last few months, and it is the smallest regional market that we track. Having said that, it is, one of the fastest growing markets in the world. There is a lot of activity there. Some of it is quite sad activity in some respects. It's people walking across the borders from Russia into the Stans and then flying south to Dubai and the United Arab Emirates. But equally, it seems a market where there's a lot of activity about to happen. Wizz Air are expanding into the market. Turkish Airlines have nearly doubled their capacity into Central Asia over the last 18 months. And destinations that we probably didn't even know where they were are suddenly appearing on network maps with connecting traffic to the United States and Europe. So I think it's an interesting time in Asia, and we should watch the Central Asian region quite closely in the coming years. I think it's going to rapidly develop.
Yeah,
absolutely.
Okay, let's have a look now at what happened this summer. This slide here is just shows the Heathrow departing seats, and like a number of airports across Europe, they announced a cap on departing seats at Heathrow. It was 100,000 seats per day. That's not what we're seeing in the schedule. There was a little bit of a dip, but it still stayed well above 100,000 through the summer. John, where are we now with the caps on capacity at these airports?
Well, they're still around, unfortunately, Becca, and you would think coming into the winter season that we would be seeing them being removed, but in fact, the cap in Amsterdam Schiphol has been extended out, and that must be so frustrating for KLM, the home airline, and other carriers operating there. And we still see this amazing disconnect between central government policy and the aviation industry in trying to help it recover, despite the fact all of our MPs take a 6-week holiday break and go away to Europe to get a suntan. It's bizarre that you take Holland, the Netherlands as an example. 2 weeks ago, they tripled their departure tax. And we all accept the industry's role in the environment and sustainability, and we're doing so much to make improvements and headway there. And yet tripling a departure tax just creates irrational consumer behaviour and a traffic jam over the border to Dusseldorf or to Brussels as people with a family of 4 go elsewhere for a cheaper airfare. You know, it encourages Ryanair-like travel behaviour, which is not really what the purpose was. So these caps are going to be here for the whole of the winter, I suspect, and potentially even into next summer, unless we can get recruitment and we get more resources in. And I think every airport in Europe and every airline in Europe at the moment is hosting a recruitment fair to try and find people. And you know, let's not forget, it takes 3 to 4 months sometimes to bring these people on stream into security positions, into skilled positions. You know, you can't just become a cabin staff member. There's a whole training program, and it's all about safety and security of the passengers. So it's going to be a long way still, Becca.
Yeah, and we've got another slide here on cancellations. They're ticking up again, aren't they? We've got Asia cancellations here on the right, and sort of by all the regions on the top left. They're not going in the right direction at the moment, are they?
No, they're not. And we've had some. Obviously, Ian came along last week and caused chaos in Florida.
I think weather is. I think cancellations for weather we all accept, don't we? But it's
the few Ians I know cause chaos every time, so I'm not surprised by that development. But you know what we're seeing here, I think, is a consequence of airports and airlines ensuring they had enough resource in the peak months of the summer and working crews and staff to their maximum hours to ensure that they did operate the program that they said they were going to operate, and they just exhausted their supply. And we're seeing people who have been getting up at 4 o'clock in the morning to man the security points, taking their well-deserved holidays now, and that means everyone's short of staff, and it's leading to those high cancellation rates. We've seen China a couple of weeks ago had a horrendous week. You know, numerous, I think nearly over half the flights were being cancelled on some selected days. And then in Europe, we're having that same challenge. I don't wish to pick on Amsterdam, but KLM increased the airfares for local passengers by over 250 euros a couple of weeks ago on selected days to dissuade local passengers from travelling, and they concentrated on the connecting flows because there wasn't enough security people to process passengers and get them through the airport in a timely manner.
And do we have a sense of what these cancellations are costing the airlines? Because if you cancel flights, there is compensation to be paid for passengers in some instances, isn't there?
Well, absolutely. I mean, I can only give you one example. My wife had a flight cancelled with EasyJet at less than an hour's notice. They were all airside in Palma and they cancelled the flight. Her compensation claim on that flight was £350. If you multiply that by 180 people, all of whom were talking and all of whom knew how to claim their compensation, that cost EasyJet a lot of money, and that was just one flight. So if you magnify that through, a week of cancellations, this is not good practice and not something the airlines want to be doing at all.
Mac, are you seeing cancellations in Asia Pacific in the same way that we've been seeing them here? You don't have the compensation culture, I think, quite the same in Asia, do you?
No, so Becca, I think if you look at some of the capacity rebuilding that's happened in, say, for example, Singapore, which has been quite forefront in its capacity rebuilding, thanks to the government policy of reopening the borders and so forth. They've taken a measured pace in terms of putting that capacity back and working with ground handlers and key stakeholders to make sure that they've got the right balance in terms of delivering a good customer service. So they're not over-promising. And so you probably see that not many of the long-haul flights have been reinstated by foreign carriers. So it's a progression towards probably year end where we will see some sort of aggressive capacity rebuilding once we get the manpower issue sorted out. So I think what Singapore's done is quite a conservative approach, and that sort of mitigates any issues that they've seen in US and Europe, and the example that John gave. So we don't have a compensation culture here, so forth, but I think they're just trying to look at it from a passenger's experience perspective, because Asia tends to be very high on those touch points, and they don't want to create inconveniences for passengers as a result of that.
Yeah. Okay, no. We said we'd talk about airports. So I know we haven't got to mega hubs yet, but still looking at airports. This main chart here shows where capacity is this week at these major Asia Pacific airports relative to 2019. I am hoping that as we move into 23, we'll stop looking back at 2019 and we'll just be looking at how 23 was versus 22. But here we are looking at versus 2019, a lot of difference. Not surprising to see Hong Kong operating 81% below where it was in 2019, but some of the other airports, 15, 16, 17%, not so bad in terms of capacity, are they?
Are they? I don't know. I mean, the other side of that, you could argue, Becca, is in normal conditions, if you were looking at versus 2019, you probably all expect them to be 5 or 6% up this week versus 2019 because of normal, industry growth. And I think there is this interrelationship between all of these airports and the market, isn't there? It's Hong Kong is, a major gateway to China, so that's where that is. Taipei, Hong Kong is a big flow between the two destinations. Incheon is very big into China, and I think we still have a long way to go. And to Mac's point, when these do open or reopen and liberalize and people can travel more freely, airlines are not going to put back 81% of that missing capacity straight away. It's going to be carefully controlled. It's going to be a matter of serving destinations, but with lower frequency than we do normally expect them to operate, and airlines trying to maximize their revenues, because we have to look at this in the context of not just putting the capacity back, but what the cost of operation is today and how much that cost is increasing, not just because of fuel shortages and supplies and cost of living issues we're globally facing at the moment, but also because of the strength of the US dollar, which is crippling many airlines around the world. Most airlines earn their revenues in currencies other than the US dollar, but are having to pay for those their suppliers in US dollars, and it's making it a very difficult market for lots of airlines.
Yeah, we're going to be looking at that in a moment, and I know we've over the time we've been doing these webinars, we've looked at all these different pressures on airlines, and it feels like every time they're just about sorting one out, getting on top of cancellations, getting on top of scheduling, getting on top of resourcing. There's just another major thing comes along, and at the moment that's the strength of the dollar, isn't it? But as I said, we'll be.
In fact, just to add to John's point, if you look at airports such as Hong Kong, Taipei, Incheon, they're significantly down because I think with the border reopening, it's going to be a gradual shift in capacity restatement because of operational readiness of aircraft, and you've got to get the crew trained up. So it's not just like you flick the switch on and the borders open and the flights get back in the air. There's a lot of processes that airlines have to get ready with, whether it's crew training, getting the aircraft operational takes months, and then getting that into the system, into the passenger services, promoting it into the distribution channel. It does take some time. So you're looking at some couple of months out before you'll probably see some sort of reflection of -81 for Hong Kong or Taipei -67 to sort of rebase itself to the new normal.
Yeah. But still, the reopening that we're beginning to see in some of those markets in Asia has to be a good thing, and it will make a difference, even if we know China's not open for the moment. Do we have any? There's still no sense of when China might reopen. Is there? I know we were saying in the summer we didn't expect any announcement before the Congress meeting, which I think is next month. Is it next month or this month? But I'm not hearing any signs that it's going to reopen. Is it? Shukar, have you heard anything?
I'm hearing, I mean, this obviously is coming from some of my contacts in mainland China, and it would appear that they're looking at on or after the Lunar New Year holidays early next year, which is at the end of January, early February, I think, and it's the year of the rabbit, if anyone's interested, I think, and a fairly auspicious year. I think the Chinese is hoping that with that they would have an opportunity to allow. I think it will be gradual, it will be incremental, the opening, not just letting the horses out at one go, in which case it would cause a huge logistical difficulties for many Asian countries, Southeast Asian countries especially. But yes, I have heard that the idea, or rather the plan is for sometime on or after the Chinese Lunar New Year holidays in early next year. So not very long to go. Perhaps 3.5, 4 months from where we are today.
I think there'll be a lot of people very pleased to hear that. And I guess the thing about China is the airlines have kept their planes flying all the way through. They haven't lost the staff, have they? So actually they, albeit that they will come back gradually, they are probably in a better position than many other places to bring the capacity, international capacity, back up to speed.
Yes, quite. You're right. I think that there will be all this pent-up demand from the middle-class Chinese, which I'm also interestingly have not shrunk despite the 2 years of COVID. So these are people with a lot of disposable income, which they've stashed in the past 2 years, and they will want to be traveling somewhere and then spending. And it would also be interesting to touch on John's point about the strength of the US dollar, because there's a lot of talk now. Xi Jinping has trapped the Chinese banks to buy up the Chinese yuan versus the USD. So how that will manifest itself in the overall, because the Chinese are the second largest holders of US debt, and how that would have an impact on the travel patterns when they do open is going to be very interesting to monitor.
Okay, we've got a question in from Yuli about Singapore specifically, and he's asking, he's surprised that it's on our chart here that it's as low as 38%, given the role that Singapore's played in trying to lead some sort of opening in Asia. Is that simply the China effect, that the China markets aren't open, or is that what we would conclude?
I think that's an important factor, Becca. I also think don't underestimate, how strong and how much ground the Middle East hubs have made in carrying that Australian connecting traffic and that Southeast Asian connecting traffic. They opened earlier, they became a bit more established as the way to get to Southeast Asia. And to Mac's point, capacity is rebuilding in Singapore, but the average frequency per destination is still down on 2019. So whilst the network has been expanded out, it's still relatively low frequency.
Okay, let's move on and have a look at some of those worrying things that are on the horizon. This chart is taken from the IATA website and shows the jet fuel price, which is coming down, but is still higher than the crude price and not coming down as fast. In the summer, we were talking about the fuel price being really difficult for the airlines. That's always been the case. I can't remember off the top of my head what proportion of airline costs are that's fuel. I'm sure one of you will know. But this is making life hard, isn't it, for the airlines?
Yeah, 45% higher than it was in 2019. You know, it has come down, but it's come down between the period of May to September, when demand for oil is, you know, normally at one of its lowest points. We're going to enter the Northern Hemisphere winter. There'll be pressure on supplies. The stories that, you know, some OPEC producers are going to control and manage the amount of production to keep the price high. We've got the uncertainties around the Russia supply chains or lack of. It's probably not going to get much better in the next 4 or 5 months, I think, unless there is an outbreak of peace declared somewhere and market confidence changes dramatically. I think we're going to have to live with these sort of prices and that sort of area between 115 and 135 through for until probably March or April at the earliest.
And this is one of the things that are driving the airfares higher, aren't they? We haven't got a slide talking about airfares, but we know the fares are high, aren't they? Anecdotally, everyone going to look for a fare seems to be complaining that it's so high.
Yeah, and it's, you know, a lot of it is actually identified as additional charges, code for fuel surcharge. And, you know, it's very interesting. Oil is quite a slippery sort of product, isn't it? But when a fuel surcharge is applied, it's a really sticky piece of pricing. It doesn't go away very quickly. You know, once it's there, it hangs around for a long time. You can't get it off your ticket as quick as you want to. And you know, that's a problem for the consumer, and it's driving that whole thing about corporate recovery, consumer confidence. Has anyone really got the money that they can afford to invest in an air ticket 5 months from now? It's a very different world to what we had in 2019.
And we spoke earlier about the strong dollar. This is a chart Mac has found for us, just showing how various currencies have changed against the dollar. Mac, do you want to speak to this? Because this isn't a topic we've really looked at before at all, and yet suddenly it's playing a really key role in airline costs.
Yeah, correct, Becca. So if you correlate that with fuel, jet fuel price, so jet fuel price might come down, but if you've got US dollar strengthening and if you've got a cost base in USD, then there's a double whammy there that you're going to be hit with. So I think when we had a discussion, Shuko, that's pretty much in your area. All this Forex USD strengthening is going to have a major impact on the airlines in Southeast Asia and generally in Asia Pacific overall. So I think maybe we can shed some light as to what impact that would have, especially in Southeast Asian economies with a high USD base moving forward.
Yes, that's a very good point, Mike. I think just this morning I was on the phone with several people from Indonesia, which is the largest economy in Southeast Asia and a major oil producing country. They were part of OPEC before, not anymore. But the thing is that Indonesia this week apparently had sent out a request for proposal for jet fuel supplies into the country. And mind you, this is an oil producing country, and they are having apparently a shortage of jet fuel, because what happens is in Indonesia, the government subsidizes smaller airports. And so the major airports in Jakarta, Surabaya, Bali, and Medan, these are the 4 ones. I mean, they're okay, but the smaller ones, they have had to be, or they are still being subsidized by the government. And because the Indonesian rupiah today, as we speak, is hovering very close to 16,000 versus the greenback, which is about the same as what, or even worse than what it was in '98 during the Asian financial currency crisis. So you can imagine the mismatch between the supplies of jet fuel that they have to bring into the country versus the weakening rupiah, which is going to have a massive impact on the airlines there, especially the privately owned airlines, because airlines like Garuda, like Pelita, which is owned by Pertamina, the oil company, they have access to government money and government subsidies. But what about all those? What about Lion? What about Transnusa? What about the other, handful of privately owned airlines that are going to have to buy this from the open market? So that's a major problem that they're facing right now. And the prognosis is for Asian currencies, the rupiah, the ringgit, the Thai baht, and the peso, even the Sing dollar, with the very powerful Singapore dollar, is being hammered. Not to the same extent as all the other emerging markets in the region, but we're seeing this perhaps escalating into the new year, because there are no signs, and it's interesting to see how the Fed will move in the next meeting, when the signs are that they're going to hike again. So that will have a major, perhaps even a very, very strong impact on the treasuries of all the airlines and also airports in the region. And that is something that airlines need to pay attention to, which they haven't.
Oh. And the other risk here, of course, is with airfares so high and consumer confidence so low, the normal tickets sort of booking profile where airlines are building their cash reserves up and have built their cash reserves up in the last 3 or 4 months that will get them through the winter isn't there, is it? I mean, it's just people are not, you're not going to pay what you may perceive as a higher than normal fare because of fuel surcharges, etc., for 6 months away. You'll sweat it out and hope that maybe the price is going to come down. So the airline isn't getting the cash in that it would normally expect to be getting in at this moment in time.
Right. Yeah. Even if they're selling more seats, I think it's going to be very difficult for them to catch up with the discrepancy between the price of jet fuel and the amount of the declining currencies that they're earning from. So to your point earlier, when you said you notice a lot of passengers, premium passengers on board an aircraft, right? And similarly here, I think there's going to be a major impact on low-cost carriers, on AirAsia, on Ryanair, because they won't be able to address it. They won't be able to offer the fares that they have been able to pre-COVID any longer. And then the governments of Malaysia and Indonesia have come out very openly to try to impress upon airlines to lower airfares, but they can't do anything about it because airlines are caught in between the economic power. Yeah, so it's a very, very, very critical position that we are in here.
We've tried to. Go ahead,
Michael O'Leary. Yeah, I was going to say, when Michael O'Leary at Ryanair says the day of a low-cost airfare is gone, then he calls it right 99 times out of 100. So and he wasn't just talking about Europe; he was talking about everywhere, I think.
Yeah. We've tried to pull together here some of the different risks that we're looking at ahead. So we've talked about many of these, but it does feel like it's going to be a difficult winter. I think we were saying this last year, we were saying this at the same time the year before. It's hard to see anything really positive for the airlines and therefore also for the airports on the horizon. One of the things we haven't talked about though is weakening cargo demand, which we're now hearing reports of, which is often a sort of an early warning signal, isn't it, about demand generally?
I mean, if we'd have looked and produced something like this 12 months ago, Becca, the only things that would have perhaps been on that chart would have been, there were concerns about staff resourcing, there were concerns about new variants, and obviously, no sign of China opening. But all of the rest of those are relatively new developments in the last couple of months that have begun to impact the industry. Cargo demand has softened quite noticeably. Consumer sentiment has deteriorated even further than we thought it could do. Increasing costs, disposable income pressures, high inflation, the conflict in Ukraine is only 6 months old. These are things that this time last year we couldn't even have foreseen, and yet they're all being added into the mix. I challenge you to find an airline CEO, sorry, I'll qualify that, a male airline CEO who doesn't use some sort of hair colouring, because you'd have grey hair if you were a CEO of an airline at the moment. If they're going around with brown or black hair, they're using colouring. It's a desperate time to be an airline CEO.
And I guess they don't have the option of the quiet quitting that we keep hearing about is happening in other sectors. You can't, as a CEO, do that, can you? Yeah. So what is this?
I think, if you look at Asia Pacific, and we talk about cargo demand, I think the latest statistics from SQ and Cathay, which are large cargo carriers, you've seen a decline in their load factor. Singapore Airlines cargo is only carrying 54% of the cargo load factor. So you can actually see the impact that cargo, which was a bright spot in airlines revenue last year. So that's hurting airlines from that perspective, whilst again, on the other hand, you have passenger yields that are quite high, but the worrying signs of cargo slowing down is there. And you could probably see that there's probably a gradual recession that might kick in as we head into 2023. So I think whatever was the bright spot in last year's revenue base, it's becoming a bit of a problem for the airlines now.
And if I could quickly add, Becca, also to the downside risk, which we're not seeing on this chart, is natural calamities. And again, this is something which it's one of those variables which all airline CEOs, with or without hair, have to look at. And it's something that's always lurking out here. We've had several quite big earthquakes we're seeing in the last few weeks out here in Southeast Asia and East Asia. And again, the impact of climate change, I don't know to what extent that's going to manifest itself in this region, but certainly I think that's something, we have a lot of countries sit on the ring of fire here, Indonesia, Japan, Taiwan, and all that. And so again, this is not something to discount with, because when it does happen, as we have seen with earthquakes and volcanic activities in this part of the world, it can disrupt very seriously the industry.
Yeah, good point. I want to move us on because we still haven't talked about mega hubs, and we've still got 1 or 2 slides before that. So John asked me to take a look at what's happened with airline stock prices. So given all of what we said before, all the difficult time, what is the market saying? What's their view on airlines as we see it through the stock prices? John, you asked for this. Do you want to comment on your questions?
I think it's interesting because there is no better sort of barometer of where the industry is than to look at analysts who pore over the data every day and how the stock price of airlines has moved in the last 12 months. Now, when you look at this, it's for many airlines they're at least 40%, and in some cases more than 50% lower than they were this time last year. And I wouldn't get too excited by seeing Cathay Pacific, Singapore Airlines, and Japan Airlines and Lufthansa looking so relatively strong, because, with respect, Cathay Pacific this time last year was probably considered a junk bond by most people because it had no idea what it was doing. So to have improved by about 30% on last year, is positive in itself, but it's a long way from where they were 3 or 4 years ago. And it strikes me that this is probably the best indicator of where the market is and how the industry is going to have to tackle some really big challenges. And to that point I was making about the CEO earlier, if you're an airline CEO of a publicly listed company, you've got the horrible challenge of shareholder value diminishing year on year. With good reason, but equally so, it's a factor, and trying to manage that against finding enough resources, having to pay increased costs for operating, salaries, staff, oil, all of the resources that you need, currency hedging. It's a real challenge for all of these airlines, and I think it's noticeable that these are and have been regarded some of the best airline operators in the world. You take United, Delta, and American, 2019, they alone accounted for about 35% of the industry's whole profit. And they're all down by more than 25-30% year on year in stock value.
Yeah, and they're not even affected by the strong dollar in the same way, are they? So,
well, here
so
in Asia,
you know, if you
sorry, yeah, I'm just going to say here in Asia that there's less correlation between airline stock prices and how they're actually doing. For example, I can raise the topic of Capital A, which is the former Air Asia, and they're looking to raise an IPO in New York. If you follow them, and one of the reasons they're doing that is because it's access to the US dollar market, yeah, in North America, and that's a very clever thing. And Tony Fernandez is known for being constantly thinking out of the box, and they've started doing different things, although they're still at the core an airline. But for many other low-cost carriers that are listed, Cebu Pacific, for example, they're struggling, partly because the market is still very soft. But again, if you look at AirAsia X, which has just come out of restructuring and remodel itself as a profitable carrier when they have not been for the best part of the last decade, and it's hovering at about 40 Malaysia cent, which is, I don't know, maybe 4 or 5 cents USD. And so it really clearly there is no correlation to that. And Singapore Airlines at the current price, maybe some people think it's overvalued. Likewise for Cathay, maybe it's undervalued. Yeah. So again, there's no clear reflection of what the actual physical airline is doing out there versus because traders do really interesting things in the stock market. Yeah. So
really?
I wouldn't take it to at face value so much. Yeah.
Okay, well that's really interesting, and it's just another useful data point to look at and see if we can see some insight, and maybe it's not the insight we thought there was, but that's really helpful, Shikhar. Let's have a look at mega hubs. So mega hubs is a calculated value that OAG comes up with based on the connectivity at airports, and it's based on the number of international connections that are available within a certain time frame, and the number of destinations that airport serves. So a very different list. This is the top 25. The Mega Hubs Index publishes, I think, the top 50. It's a very different list, isn't it, John, to what we had 3 years ago, and just dominated by the US airports.
Absolutely, it's a unique snapshot in time, Becca. It's almost like looking at the Premier League table and seeing Brighton in 4th place. It won't happen again. But it is because the US market has been performing very well for the last couple of years relative to everyone else. The scale of the domestic connectivity in the US, the multiple hub system that the carriers operate, all of these points, the growth in the low-cost airline sector, which has been phenomenal. I think Spirit have got 40% more capacity than this time in 2019. All of these little elements multiply out and make these airports, improve their positions in the mega hubs story, to the expense, of course, of those places that we are familiar with and we used to see here so frequently, places such as Singapore, Hong Kong. There's still connectivity going on there. There's still mega hubs, but if we look at this next year, then I think we would expect to see some of these places moving out or falling back down the list and being replaced by a more familiar set of destinations.
So we've had a question from Tom Ballantyne about which are the sort of winners and losers in terms of Asian hubs. Do you think it's as simple as in a year's time we'll see the list look like it did 3 years ago, or are there some airports, has a Hong Kong permanently changed its position now? Has it sort of just become a lesser hub, and it will be going forward?
I think it might be longer than a year. It might take 2 years, could even take 3 years. But I think the fundamentals of geography, the base carriers that those particular airports have, will bring them back to that those positions that they previously occupied in 2019. If you took Hong Kong for an example, its access to China is better than anyone else's. It was and will be the gateway to China. Initially, Cathay will operate lower frequency long haul destinations, but they'll get back to 5 a day on Heathrow. They'll get back to 3 a day on Los Angeles or whatever it happens to be. But as they build out, that will take time, and it might not happen quickly. In some cases, they may move slightly quicker than they would want to, because they'll need to protect slots at places like Heathrow. Otherwise, the use it or lose it rules will kick in, unless they can lend them to another airline that wants to use the slot on a short-term basis. But I think, look, we're already seeing this. Despite everything that's happened, the airports that were the big airports, the airlines that were big airlines, are now coming back to prominence. The list of the top 20 airlines has a much more normal feel and size to it. Same about the airports and the country markets. It's been a horrible 3-year blip, shaken everyone to the ground, but normality is being restored.
Albeit that I agree with most of what you've said, I wonder, Mac, if you have a view on Delhi and Bombay, because they've clearly risen up the rankings here. Is there something different happening there? Are they becoming bigger hubs and will be going forward?
Yeah, so we've got new entrant airlines in domestic market. So Indigo plays an important role with codeshare with international partners. So recently we saw Qantas coming into Bangalore, and the whole crux of Bangalore strategy was to actually connect to other parts of India through the Indigo codeshare partnership. So you'll see Delhi retaining that position. As you can see, Indigo is 34%, 1/3, that they dominate in Delhi. And there's a lot of connectivity feeds through there. And so is Bombay as a gateway hub for international services. So I think India will play an important role, and you will probably see some other points emerge with the connectivity. So Bangalore is quite proactive. They're connecting the dots between Seattle, Bangalore. That's slightly delayed due to some of the airspace restriction that they can actually flow through with Russia. So I think eventually, once we get into that normality of recovery, we will see some of these hubs getting strength. And Becca, just on the Hong Kong bit, I think a lot of people forget that Hong Kong is actually the largest cargo hub in the world. So if you look at the connectivity, what John was saying a bit earlier, I think that will maintain, and I think it's the carrier's interest as well as Hong Kong as a city to maintain its position. So I think that will be pretty much top on the list. And if you look at the new leadership team, the government that has come in to Hong Kong, the mindset's very different. And they've just opened the 3rd runway. So I think there'll be a lot of room for that movement to rebuild on a gradual basis that capacity that lost out in 2020 as we moved into the COVID crisis. And China may actually open up with Hong Kong and Macau. So there's talks of that easing before perhaps Chinese New Year into 2023. So we may see some gradual shift around the hub status and connectivity to existing network that Cathay actually operates out of Hong Kong with mainland points that they serve at the moment.
I think, Mac, that's all. It's all. You're absolutely right. I think the elephant in the room for Hong Kong and indeed for China is ultimately the lack of, or the inability of European carriers to fly through Russian airspace, which is going to continue to be an issue for, I think, some time. Now, I said a few months ago, I'm sure some European areas, some European airlines actually won't be all that bothered because the market, is still in a recovery phase, and they found other ways to use those aircraft. But it's interesting that British Airways have announced that they're going back to Haneda and to Hong Kong from the middle of November. So, they're going to take more circuitous routings to make those journeys. But until that Russian overflight issue is resolved, the only net winner in this will be Cathay. and the Chinese airlines once they reopen, because European carriers will have to avoid that space.
Yeah, John, I think Hong Kong is relatively okay in terms of the Russian airspace, right? They cut across Middle East and so forth, if you look at flight radar tracking. But I think the biggest obstacle is the Korean carriers and the Japanese carriers with Europe. And the weakening of, or strengthening of US dollars against Japanese yen is going to pose more issues for them in terms of longer flight time and the carriage of fuel. So that's something to watch out for in terms of the Japanese connectivity into the future.
So the mega hubs also looks at low cost mega hubs. So these are the airports that have a very high low cost presence or ability to connect, even though they may not have a connecting. It's not like online connectivity. But we look at what are the potential connections between low cost services. Here we see Delhi and Bombay coming up on top because of Indigo. John, any quick observations here? We've still got a couple of slides I wanted to get to, and I'm very conscious of the time, but is there anything here we need to be drawing?
I mean, you know, in essence, Becca, what you see here is a larger list of leisure destinations rather than business destinations, and also secondary airports in major cities as well. So you can see Sabiha Gökçen in Turkey in 10th place, for example. Other secondary airports that appear there as well further down the list. Fort Lauderdale Hollywood International Airport for its full title. Secondary airport to Miami. So,
okay. We wanted to change the subject slightly. We've got a few newsy items, things that have happened been announced over the summer, or changes we've seen that we just wanted to cover briefly. One of them was the in and about turn, I guess, the codeshare agreement between United and Emirates. Is that a bit of a surprise?
Well, never means never, does it, in the eyes of Emirates, who were never ever going to join an alliance, and they haven't joined an alliance. You know, this is a bilateral agreement between the two carriers, but it's a big step towards joining, isn't it? And United put in their own flight in from Newark. You can see the connectivity in both directions, and who's the winner and who's the loser. Well, clearly in terms of destinations served, the US and United probably will benefit more than Emirates, but it's interesting. Actually, I think it says a lot for how far the United Airlines product has come in the last 5 or 6 years. That Emirates are comfortable to put a code share on United Airlines 5 or 6 years ago. I don't think they'd have entertained that. Now they see enough product improvement and service quality that it's worth doing.
Really, really interesting observation. Another piece of analysis. This came from a conversation between, I think, yourself and myself, John. You were interested in how the time of day of operations changes at airports around the world. So we've listed the 24 hours of the day along the top, and then a number of airports sort of listed in order of where they are in time zones. And we show the percentage of their capacity or their movements in each hour slot of the day on GMT. So you can see that green band across the middle is the sort of nighttime operations where they're not flying. And I think the point of this was to say where airports are constrained, actually there's still hours of the day when they're less busy than other days. So if you're managing resources, surely you would try and even out the capacity through the day. I know it's not always that simple, but is that your takeaway from this, John?
Well, I was hoping that these sort of colours would show me sort of a number like 68 or 67 behind it to prove I'm not colourblind, but that didn't work. Yeah, it's about the fascination with, despite everything that's happened, the principle of critical mass still applies in the airline industry, and airlines gravitate their schedules back into those core hub hours, regardless of availability. And if airports were railway companies, then you would be pricing at very different tariffs at very different times of the day to reflect peak and off-peak demand. And we don't really see that happening at the moment. We see some small airports. London City is an example that premium price for a few hours, but most airports have yet to think about that. And as the industry evolves, I wonder if we're going to start seeing dynamic pricing on airport slots and use of infrastructure at peak times of day. It's just a logical business move, and as more and more airports are placed in the hands of, private investment, private equity, whatever it happens to be, is this a next step that we'll see in the commercialization of airports?
Shuker, do you have a comment on that? You have a finance mind and approach to these things. Is the different pricing of slots?
I think that there's a lot of issues that are, goes into an airport operation, irrespective of the geographic location. But as John had highlighted, I think there clearly are several Asian airports that need to have a relook at how they can capitalize, how they can exploit further when the market reopens, especially when China reopens, and how they can use that to their advantage. Because apart from Changi, which has been known for being very, very active throughout the 24 hours in a day, very few other airports in Southeast Asia, apart from Incheon also, that have not really exploited that. So I think there will be an opportunity for some of this in Bangkok, for example, perhaps even in Jakarta, to have a relook at it. If only they try to not to reinvent, but rather to look at it in a different way, in taking into account the different time differences and the inflow of potential travelers into each particular destination in this region. So with that were to happen, and I think business will grow. I think it's just a matter of creative thinking, or even trying to address problems in a different way.
Yeah, very interesting. And we have, I think this is our last slide, the world's longest routes. OAG is about to launch, I believe, the busiest routes report. Amongst other things, it will show some of the world's longest routes. So these are the top 10 today, aren't they, John? JFK Singapore, the longest route in the world. It's one of those sort of headlines that doesn't particularly help us, but it's always one of those things that people enjoy seeing.
Journalists love it, Becca. As I say every time I see these numbers, if it was only 2 miles between JFK and Newark, that would be brilliant, but it isn't. And geography and circles have an important role on this. And I love to see Auckland JFK there, given the challenges that Air New Zealand have had since they've started that route. Stronger headwinds than anticipated, 65 passengers left behind, baggage being left behind on the first flight. It's great to do these long routes, but operationally, logistically, there are sometimes some challenges that you just cannot legislate for. And you've got to have a really good mix of traffic to make these work. Something like JFK Manila scares me greatly, because I can't see there being a lot of front-end premium traffic on that route. Whereas if I'm looking at Newark, Singapore, hub to hub, United's powerful hub, Singapore, corporate demand, I can see why that works. I can see why JFK Singapore works. And I can see perhaps why Atlanta Joburg works. But for many of these, for a couple of these, they're so leisure dominated. They're fashionable routes, aren't they, rather than sometimes
they're headliners, aren't
they? If you also look at this long routes like Singapore, New York, for example, in the old days when they used to use the 340, 500, it didn't work. The economics didn't work. So it's thanks to aircraft technology that's really made a big difference in terms of the operating economics. So I think that's playing a key role with Singapore. Qantas too.
Yeah, that's a very good point that Mike just made, because it depends on the tool that's being used as well. I mean, I remember flying on the 300, 400, 500, the Celestas on SQ, and it was lovely, but the economics was just there. It wasn't making any money. And now with the 350 ULRs, it's the perfect aircraft for this particular destination from Singapore.
It is. But you know what surprises me more than anything else is, you know, all of these technological advances, all of the improvements we've made. Why can an airline still not put more than 5 hours worth of decent in-flight entertainment on any flight? You know, by that moment in time, we're all stir crazy, aren't we?
You've been doing too much flying over the summer, John, I think.
No,
I think
that's right. I've run out of films. I've run out of films.
And we've
Maybe,
run
John,
out
you
of
need to fly
time.
Emirates, yeah?
We've run out of time at this point. We've run over. Thank you very much for staying with us. If you're listening into the webinar now, thanks for your time. Thank you very much, Shukar, John, Maya. Thanks for all your insights. I'm not going to ask you for closing words, because I think I've given you plenty of time to say what you think already. But it's really great to have you join us today. And we will be back on Thursday, the 10th of November. So that's going to be a Thursday rather than a Wednesday next month. So do put that in your diary and join us then. Look forward to talking to you then. Bye then.
Thank you very much. Take care.
Yeah, bye-bye.